Hello guys, how are you? Hello guys, how are you? So it's another day, and let me just make sure that I can. Okay, good. I was just testing to see if you guys can hear me loud and clear. I'm gonna be brief, but really the goal of this live is to just share what I'm learning and how I'm trading in this very highly volatile US market. So the war in the Gulf, has in a way actually caused some fear because I have seen that today, as you will see, there has been some sell-off in the US stock market. In of course, most of the stocks, not all the stocks, of course, there are some that have really gone up. And in this conversation, that's what I'm going to be talking about. Some of the stocks that I've been looking at and the macroeconomic picture. What I think uh, could be other areas that I am looking to invest, and very risk areas that I also think could be areas that I would avoid in my case. But as I always like to say, whatever I share on this is not supposed to be taken as investment advice. What I talk about here is what I am doing and what you guys should necessarily do, because investing comes with risks, especially if you are someone who does not have experience in the market. For those who don't know me, my name is Isaac Jonas, and one thing that I like to do is to invest and trade in the stock markets, and I primarily invest in the US markets, also in the Canadian stock markets. But from time to time, when I see opportunities, I trade to have some money that I can just use for my liquidity. But overall, I am a buy and hold guy. I want to buy and hold for the long term. And my background is I'm an economist, and I would safely say that I'm far from being an expert in what is happening in the Middle East. But I'm someone who likes to observe what's really going on and try to apply what I'm learning to make money. So, this war that has been happening between Israel, with the support of the US, of course, and against Iran, has been rattling, the markets. Like you can actually see what has been happening, right? But my experience in the stock markets has been that I have learned that if I focus mostly on things that I can control, like the fundamentals, stocks that I understand, and look at the long term picture, I have been successful, at least in making more money than I've been losing, right? So that is something that I've been learning. So the first thing that I would say is, on this part, I'm just going to, give you an overview, but then I'm going to do some technical analysis and show you what are the big movers in the market, in the US market, and also look at gold, commodities like gold, crypto. I don't really trade crypto, but mostly stocks. DXY, that is the index that is for the US dollar relative to other currencies, and also like silver, gold, like I mentioned. These are things that when I see them moving, they kind of like give me an indication, right? So I like to pay attention when I see that. So um the bigger picture is that the geopolitics, whether you like it or not, if you are investing in the market, it affects, it causes volatility in the market. So the escalating conflict involving Israel and US and Iran has resulted in some attacks on energy infrastructure and threats to the Strait of Hormuz, according to CNBC. But as I said yesterday, the Strait of Hormuz actually handles about 20 to 25% of the global oil flow. So the closure or disruption of this very important um, place actually will cause the disruption on the market. So this will likely, as I've seen, be reflected in the markets, right? I spoke to a friend who is actually in the Middle East, and they were telling me that the price of gasoline is actually higher, right? I think yesterday, a day before yesterday, I spoke to a friend in the UK, and they were telling me that um, it's also, the price of gasoline actually in the UK had gone up by 20 cents. So this is something that is not just happening in the Middle East, but it will have a bearing whether you are in any part of the world, because most of the Middle East countries, they are the exporters of oil. If you look at the OPEC plus countries, right? If you look at even Saudi Arabia, if you look at UAE, if you look at Iran itself, right? These are countries that export oil. Of course, the US, they have their own oil. Canada, we have our own oil in Alberta. But the challenge is that these supply chain disruptions can actually cause instability. As you can see, that the West Texas crude intermediary, that is the benchmark that we use for oil to see the oil price here, it has been actually showing that it has been going up. If you look at the Brent and crude oil, it has been going up. So these are some of the things that I like to look at. Basically, if I'm just looking at the reaction in the markets, and this is not just about what is right or wrong, but this is what is usually happening. So let me share a screenshot to just look into what's really going on in the markets right now. Particularly, I think, let me see if you guys can see this. This is the market is currently open. Let me just make sure that you can hear me. Right? Yes. So, yeah, you can see me. All right. Guys, also make sure you can subscribe and follow me, whether you're watching me on X, on Facebook, for more regular updates. So this is the Nasdaq today. You can see that the Nasdaq is 0.95% down, but earlier on today it was actually down. It was actually lower. It went down as low as you can see here. So it went down here. So that was almost 2% down. This is just today alone. If I look at the S&P 500, today it also went down. It is currently about 0.8%. The other time that I looked, it was almost 1.9%, almost 2%. So what do I notice when I look at this pattern, right? There are two things. One thing that I try to avoid doing is to try and predict things in absolute terms, right? What this means is that there's been a slow bleeding in the equities market in the US. So if you look at most of the stocks that I follow, right, they were mostly red, they were mostly down. So this is a reflection that there are more people who are selling than people who are buying. But this, in a way, can create opportunities for the long term, right? If you know the sectors that to look at. Today, this is not investment advice. I bought some few shares for Berkshire Hathaway. I think it was around 474. I'm going to be slowly buying some of the, like shares in some of my portfolios, because uh, usually in times of crisis, people tend to be too scared, but over the long term, it's also another way to actually accumulate shares of wonderful companies or indices, ETFs, exchange traded funds, at a much discounted price. And another thing that I look at usually is the volatility index. So the VIX is basically, you are looking at the expectation of traders and investors. Let's say if you are looking at the next 30 days, is it that if you see it going up, right, it means the fear is increasing, right? A lot of people are becoming fearful of maybe that this particular escalation in the Middle East might actually result in more and more of the escalation, and God forbid, maybe in a situation where there might be use of nuclear weapons. I'm not an expert in this thing, but I was reading articles that was talking about that could be the worst case scenario. So that means in the market, more and more people will be fearful, and what that means is they will sell, try to protect their capital, and in so doing, prices of equities, like most stocks, will go lower and lower. But you will notice that there are some stocks that actually can actually be benefiting from that, right? So if you look at the defense stocks, stocks such as Palantir, because in a way it is one of the stocks that maybe the US Department of Defense, they actually use for analytics and stuff like that. So what this means is that for people who are invested in those sectors, they might actually see some benefits, which is the unfortunate thing, that in terms of crisis, even if people are dying, there are literally some people who will be making money in this case, right? That could be through investments or other means, selling weapons. So you're looking at companies that are actually selling weapons. So if you look at some defense stocks, I follow one defense stock here. There are quite a number of them. Some that manufacture, I think, Lockheed Martin is Lockheed Martin. Lockheed Martin. Let me see the ticker name for Lockheed Martin. Lockheed Martin. It's it's LMT. So let me see, but today it's down actually. So this is another defense stock, but you see today it is down. I think probably the fighter jet that reportedly dropped in Kuwait, that was down. That might be something that might be reflected in the price. But again, what you notice is that if you look at the long term cycle of this, you see these stocks have been gaping up a lot, right? The stocks don't just, in my experience, they don't just go up in a straight line. So you will see that they go up and down, up and down. But when I'm investing, I don't want to be buying stocks when they are at this point. I want to be buying when they are at the bottom of this Bollinger Band, when they are oversold, right? So right now, I would be selling covered calls if I had shares for this. And then Brent crude, most oil stocks, at least from what I've seen, they've been going up. You can see that if you look at Brent, let me just look at 1 day chart, right? To just see that reflection in a smaller time horizon. So if I look at it today, it jumped up, right? So this volatility, what this entails is that a lot of people are being fearful, and more people are predicting that the prices of Brent is going to go up, right, to almost 100 US dollars per barrel, right? So you are looking at probably another from the current price, you are looking at probably another 15% upside potentially. Nobody really knows if there is a ceasefire. Probably this will actually go down, because people will price in to say, well, now that this has been resolved, the Strait of Hormuz will actually be open, and normal oil production will actually start to happen, because markets usually price in the future. So most likely this is going to go down. But again, if this situation continues to escalate, you see, the West Texas Intermediate crude oil, you see, it was yesterday, it was around 72. It went up today by almost 4%. So if it continues to go up, then that's another thing. Because when you then look at inflation, right, this is going to affect most people, most households, because if you look at countries that do not have their own oil, or that import most of their oil. If you are looking at countries like China, you're also looking at India, that have that consumption, they are going to be affected, especially if they are dependent on the oil that comes from the Middle East. So this is what is happening, right? But my view is that, as a long-term focused investor, when companies actually drop, this might be an opportunity to actually get into good companies. Again, this is very important for me to stress out that this is not investment advice, but my experience is that good companies that have strong balance sheets, that have, in other words, free cash and cash equivalent, free cash flows on the cash flow statement, you see there are free cash flows, growing cash flows, that have low debt, that have good management, that are undervalued. They tend to recover after this crisis. I don't know when this crisis is going to come to an end. Again, in the interim, what I am doing is I am planning to buy some VIX, because what I've noticed, and I will do this through like, let me take 1 hour here, buying leveraged ETF. But this leveraged ETF is very risky because it's twice leveraged, right? You see, yesterday, today it actually went down, right? Let me look at this. You see, it went up, it spiked up, but you see, it has already gone down, right? But if you look at it, yesterday, I think it was around this. So it spiked up almost 7%, right? But already it had gone up by more than this percentage, because it actually came to this point, right? So if you look at the it actually went up by, it was very volatile. So you are looking at 8%, right? It went up 18%, I think, and now it's only up 7%. So that means if you just continued to hold, if you didn't sell, you are going to most likely lose that money. But why am I thinking about this? Again, to be clear, this is not investment advice. What I've noticed is that if there is no ceasefire, right, there are likely going to be more attacks at night, retaliations, right? So last night, as I was about to go to sleep here in Canada, it was in the evening. I noticed that there was, a report that the U.S. embassy in Saudi Arabia was bombed, was attacked by missiles, Iranian missiles, reportedly, and I even saw it on the mainstream media as well. So what this does is, if there is more and more escalation of this, the volatility is going to increase, and the more this war is going to prolong, right? I think the risk is likely going to be much more, the risk of potentially using unconventional, um, like arms. So I'm not an expert in this thing, but it's me just synthesizing the information that I see on social media, and just using, like, my analysis and macroeconomics to say what would be the impact of the increase in prices. We are already seeing this, right? So a lot of stocks that are actually um, in a situation where they have a lot of debt, that do not have that are not profitable, those companies, they are likely going to be affected in a big way. So those are the areas that I avoid. Airlines, they are also at risk. If you look at tourism, especially corporations that have exposure to the Middle East, right? Those are companies that are actually going to be impacted heavily. So what that means is that to play it safe, I am just gonna be buying index funds, right? I bought a few shares today. Did I actually? I think today I bought a few shares, right? For this, I like this because VT. This is not investment advice because it has exposure to the whole world. Vanguard Total World Stock Index. For SPY, I would love to start accumulating some shares for SPY and QQQ, but I don't think that it has really dropped enough. But I'm a guy who likes to dollar cost average. So let's look at SPY, which is an exchange traded funds managed by State Street Global Advisors based in New York. I think um, if I look at let me just look at 1 year time frame. If I look at this, let me just make it nicer. Okay. At some point, that was when President Trump announced the tariffs in April last year. It really went down here, right? So you saw that here from the peak. Right now, SPY is down. If I look at the week high, where it was, is only down 3% from the high. So it's just 3% down. So it's not even a correction. A correction is a 10% drop in the major indices. So if I look at it, it's not yet the point where, I mean, if I wanted to, I could just dollar cost average. In other words, I would be just buying on red days, right? But I think for SPY, I bought Berkshire Hathaway, I bought VT, Vanguard Total Market ETF. But for SPY, I would like it to drop even more. If it drops maybe to a correction territory, I would like to start to buy some shares for SPY. So that would be about 10% drop. So if it drops to around this level, right? Let me just put an alert here so that I can start to pay more attention here. So if SPY drops to around 650, then I would start to actually accumulate shares. If it goes down even more, I'm just going to keep on adding. The issue is, you see, this ETF is, I mean, for a regular guy like me, it's $684 a share, right? So I want to slowly add positions, right? But it's relatively expensive compared to other smaller, like if you look at the one that I spoke about, Vanguard Total Market, the VT is 144, trading at 144. So I want to just buy more shares. The other good thing about buying these ETFs is that they are broad based. This is not investment advice, but they are not just focused or exposed to few individual companies. If you look at SPY, you're looking at 500 companies that come from different sectors. So this might be a good thing because overall, if there are more companies, and that has been the case, that actually perform well, they are going to most likely lift the performance of the overall index. So in that case, that means the ETF that tracks that index, in this case, it tracks S&P 500 index. If you are looking at SPY ETF, it's most likely going to also have uh, much better returns. Now, NASDAQ, I like to have exposure to the NASDAQ directly through the QQQ ETF. So this is another ETF that I'm looking at, and this is more focused on the technology sector. So if you look at this, right now it has been down. Let me just see here. If I look at from when it went to the top, it reached this top. And if you look at Nasdaq, it's more volatile. It's now almost, let's say, 5%, right? Down. So correction territory, that means it has to come to around this level. So if it comes to the correction territory, 10% drop, that would be when I would be interested to start to buy some shares. And if I look at a bear market, it really has to drop to around, these levels, right? So if I'm looking at these levels, these are levels that I am actually interested. Why? Because each time I like to see the stock retrace to these levels, I want to add some shares. I want to add some shares on this support, because I'm looking at the long term. I'm not just buying for the short term. That brings me to another important point. Is there a risk that the US is going? I see there's a comment here. Hi, how are you, Lamson, my brother? Um, I think I'm doing very well. Thanks for checking in here. Um, what I think is that, if I look at some of the writings by very famous people, like if I look at Ray Dalio, is the founder of Bridgewaters, is one of the big hedge funds in the world. It has a history of actually giving very good returns. And this cycle where there are some, because there was then a period when the Dutch Empire was, it was the major power, right? Now, America is the superpower, right? Is it a period where I would say um, this is going to come to an end? I don't know, honestly, and I don't like to make prediction. What I like to do is to make sure that even if this war continues to go up, I'm still going to manage my portfolio. I'm not going to lose everything. I want to be building my portfolio gradually and slowly. And this is the strategy that I've seen that it works, because if you just jump in and go all in, and what if this war continues to go in? And the Iranian officials, from what I've seen online, they've declared a period of mourning 40 days, right? Starting, I think, from 2 days ago. So that means probably for the next 40 days, there are going to be a lot of volatility, a lot of uncertainty. And what is unfortunate is that it's the whole Gulf region, and the whole Gulf region is very important, particularly for oil supply chain. Like I said, 20% of most of the shipments, they pass through the Straits of Hormuz, and now there are reports that most of the cargo that was supposed to pass through the Straits of Hormuz is now going to the Cape of Good Hope. I think that is in South Africa, right? What that means is there are going to be delays in the supply chain. So this is something that's going to cause some risks on the global economy, right? Um, Let me just respond to this comment here. If you guys have any questions, let me know, and make sure you subscribe, you follow me. I think the most important thing as a retail investor for me is to just not look at the headlines and not think through it, because what I've seen is that there are moments when crisis like this, if you look at it historically, right? There are moments when there is crisis like this, and people are very fearful, and the result is that they sell everything only for the market to go up. Let me just look at the S&P history of crisis so that you see. But again, what might have happened in the past, it may not be the guarantee, right? Let me see here. Let me look for this. What happened in the past is there's no guarantee that is going to happen. So that's why it is very important to say when you are investing, right? You look at this chart. This is, I got it from TradingView, and this is from Semcast. Credit to you. Let me see if I can. No, okay. Let me just. Okay, what are you guys seeing? Are you seeing this? So this guy did an analysis of this. You see, I'm just showing you guys. Okay, good. You can see this. So you see this chart that is on the screen is, you see, this is the S&P 500, right? Chart. Each these candles, they basically tell you what happened during that time period, because this is not my chart. This was done in 2021. I'm trying to figure out to see what was the time frame for this. Anyway, regardless of that, but the pattern is whether it was weeks or days, these candles. But what you can see here is you can see that over these years there has been, a drawdown. 6 months there was 30% drop when in 1962, when there was a flash crash, right? This was a boom. This was a major drop, 30%. So that's more than even a bear market. Okay, the past 3 years, the S&P 500 has been returning phenomenal returns. I think the previous years it was about 24% or more than 20% the other year. We're looking at the past 3 years, and last year I think it was around over 15%, right? Return. This is just in 1 year. So that means if you had 100,000 invested, right? You invested 100,000 at the beginning of the year, right? It goes up 15%, you make 15,000. That is, that is a good thing, right? But the market does not go up in a straight line. So you see, it has been on an upward trend, but it goes up and down, up and down, up and down. But remember, this is different from individual stocks. This is the broad S&P 500. You are looking at 500 companies that come from different sectors. So they between this period, right, there has been 7 crashes, and I think he is just looking at until 2021. There were 7 crashes according to this chart. I haven't checked the um, authenticity of this, but judging from this, okay, these candles are for 3 months, and you can see that is saying that there's been a 8.22% compound annual growth, right? So if you had invested, you have dollar costing averaging, you were going to get an average of this. Average, it means some years it goes up, some years it goes down. But there was in 1973 President Nixon and OPEC oil, there was 20-month drawdown. The market went down by 50%, right? From this chart. I haven't, checked the veracity of this. There was the Vietnam War. You see that there was another war, right? And the market dropped about 36%, right? And it lasted for 18 months. So that is 1 year, 6 months. So the key question that I always share with people is like, if you are investing in the market, are you able to withstand that without then being in a situation where you would be forced to withdraw some of your savings during that period when the market is down? And you don't want to be doing that. You want to be buying when the market is going down with the expectation that it's going to go up, right? I'm just monitoring the UVIX. That's the one I want to buy a few shares if it continues to go down, because if the market then goes up tomorrow, then I'll probably cash out. I'm not going to be too aggressive about it, but that's really the idea. So 1987, that's the year when I was born. There was the Black Monday. 11 days, the market dropped 36%, right? 20% drop in 1 day. This was really significant. And a lot of investors, they tend to panic when situations like this happen. So I'm just showing you this so that at least you have an idea. Then if you look at 2008 financial crisis, this was massive. I read a report, I think, which said the Nasdaq dropped by almost 70%. So if you then look at the Nasdaq, think of individual companies, right? They would be like really down. So if you have your cash, that's when to just buy shares. But the idea is, I like to buy slowly. Let's say I have $10,000 that I want to put into the S&P 500. I would say, okay, I'm going to say to divide it by 10. So I will say each time the market it drops, I buy shares worth 1,000. If it continues to drop, I continue to dollar cost average, and I I don't look at it right after that. Then there was the COVID crisis, of course. So these are things that I am sharing with you guys to share with you that what can potentially happen in the market, right? But the idea is there's no guarantee that I'm just going back to the chart that what happened in the past is going to happen in the future. Maybe this is the time when maybe China is going to overtake and be in control of the world. Because one thing that I'm not saying that's what is going to happen, but there's been a lot of speculation that if you look at their GDP, they don't have a lot of long-term debt. But in terms of a multipolar world, China is now a big player. If you are looking at the supply chain, like providing the processing of minerals, if you are looking at their economy, I haven't been to China, but I'm just basing my analysis or my opinion on what I read. If you're looking at their economy, right? So maybe it's a time when China is going to take greater and greater share in terms of the trade that it is going to contribute to the world, and the US might be at a point where you know their power, their hegemony is being challenged quite openly, right? Because what happens with wars, periods of wars, great powers from, if you look at articles that let me just check here. Ray Dalio, he has been very vocal about cycles of most powers, how countries go broke. This is a very interesting analysis that he has done. Let me just say, let me see here. The thing is, when I'm looking at these things, I'm just looking at how things, how people with access to knowledge, who have experience, what are they saying, right? I usually like to summarize things, so I'm just making sure that I basically is talking about how countries go broke, right? This is the guy here. He has made quite a lot of money, and basically what he's talking about is looking at a high level, right? Debt, credit, money cycle. He has been studying these these cycles for a long period, right? And this is what he thinks, right? Again, that's his opinion, right? And it's not necessarily what is going to happen. It's just looking at all possibilities. So there's a chance that I'm saying this to say I don't want to be too exposed to the US alone, right? But historically, as Warren Buffett has been mentioning again and again, that you know most people who bet against America have lost, at least over the past couple of years. But I don't know for sure if this is going to continue, right? So what's probably going to happen? That's why I like to have an exposure to the total market, not just the US, right? That's why I'm buying the Vanguard total market. So that means I will have exposure to Europe, I will have exposure to Australasia, I will have exposure to Asia, I will have, of course, exposure to North America, right? So that at least, um, I don't lose my money. Now, what I'm noticing is that towards the end of the day, at least the past 2 days, the market seems to be recovering. Yesterday, the market was actually up which was very strange. But today, then, what happens is when some people see that the market is up, I don't like to be chasing. To say, okay, now the market is up, maybe it's gonna go up. I want to be buying when there's a lot of fear, and only the things that I have conviction, that I believe that they are going to benefit from what is happening. And I'm also looking at the longer time horizon. You can see the US dollar is getting firmer and firmer against a basket of other currencies. So other currencies. What this means is that more and more people, they are buying the US dollars, right? Why? Because it's very liquid, but it's also generally a store of value, right? People think like, oh, if there's uncertainty, they either go to the US dollar. What I thought was also interesting was that gold today, it really dropped. Why is this the case? Because people tend to, when there's a crisis, they tend to go to gold. But it seems today, from what I'm seeing here, that people are buying more US dollars relative to other currencies, right? That's why the US dollar is firming up. This is certificate of deposits. So if you want to trade currencies, this is what I would be doing, right? But now, is it the right time? I don't know. What I've seen is that sometimes people tend to want to jump in late, right? Once I see that it's already up, it means this is not the best time for me to be jumping in, right? I want to jump in before, right? And so that when everyone comes in, I am exiting so that they provide exit liquidity for me. So you see that the US even went up. Uh, Today it was like up to this level, right? So it was like, okay, 1.28%. So this is a big move, actually, if you look at it, right? Yeah. Now, as you can see, it's just 0.4%. So what this means is there are people who have made money here, right? Those people who bought the US dollars when it was lower, right? Now, this is how they make money. If you bet right, then you are going to make more money. Now, another thing that I wanted to say, there are sectors, even if the war is going to continue, I think, there are sectors that might still benefit. If you are looking at sectors such as the energy sector, there's still going to be need for energy, right? So there's a company that I have been looking at, and again, this is not investment advice. BE is a very interesting stock, and what I find interesting is that this stock is very volatile, right? Let me show you here. It went down today. Let me just go BE. It's one of the stocks that I have been following. If it's very volatile, very volatile. So let me just look at 1 day chart. If I look at 1 day chart, look at this stock, right? It has been like on fire. If you look at it here, starting in around August, that's when it started to break out, right? And it went up and up and up. But right now, it's very volatile. It goes up and down. But the thing is, what do they do? These guys, they operate electronic production equipment. They Let me see exactly what they do. I like to just, I think stock analysis gives me a much better perspective. And you see here, if I go on profile, so they design, manufacture, sell, and install solid oxide fuel cell system for on-site power generation in the United States and international. This is a very interesting perspective, though. I wanted to also mention that for those who follow Zimbabwe, they reportedly actually banned exportation of raw lithium. What that means is that probably, that's why you see lithium, you're talking about batteries and stuff. They actually affect the world prices. I saw it on Bloomberg, right? That they were reporting that. So if a country can move market like that, that's very interesting, because if we are moving into a future where we are going to rely more on solar as well, right? That means such companies can benefit. So this company is very interesting, but I didn't like the fact that, let's look at their revenue, 2 billion. It went up by 37.3 billion. But what I don't like is that they are still losing money. I don't like to, invest in companies that are losing money. You see, net income 82 minus, they lost 82 million. They are burning out cash. Forward price earnings 101. It actually has dropped from the last time that I checked. That was a major concern for me. Look at the volatility. It moves 3 times more than the market. Hey, this is crazy. 3.12. Look at this company. It was trading at $15.15 1 year ago, right? But now it's 108. It went to as high as $181 almost. So if you look at the day range, look at this. It's very volatile. So it has a lot of volume here. But for me, this is a concern, right? Let me just look at the income statement I told you guys. I showed you there. Their revenue, 2 billion, their latest. If you look at net operating income, okay, I saw that they were making loss. So let me just look at the cash and cash equivalent. They have 2.5 billion. If I look at the long term debt, short term debt, they don't have short term debt. Long term debt, do they have long term debt? Of course, they have 2.7 billion against cash of 2.5. So that's not really bad. Let me look at their free cash flows. Their free cash flows, I like to look at the pattern, not just one. They made like 57 million here. Free cash flows. At least it's positive, but it's showing that they were having negative free cash flows. Probably they were investing in their infrastructure. So this is an improvement in my view. So you see, it's from being worse and worse, now it's getting better, right? So that's something that is interesting. Their balance sheet is solid. Their long-term debt, relative to their cash, I don't think they are just going to go bankrupt anytime soon. Now, forecasting is something that is interesting, but I don't look at it in a way that, I just look at it for academic purposes, because stock prices, they can be affected by many things. But what these guys do is they are giving a focus for the next 12 months, and they give certain assumptions which have to hold true. Again, no offense, there are a lot of analysts who have made a name for themselves, but I just look at it to kind of like look at how other people are thinking about this and see if there is something that is unique. But they are saying the average price is, but this is lagged usually. This was March 2027. Okay, interesting. There's one analyst who thinks this stock is valid, is supposed to be probably like $10, right? So if you are looking at the extreme end is 207. Wow. So what are you going to believe? So for me, I'm looking at, when I'm investing in a business, I am looking at the long term. But because of the energy needs, I think this is something that is very interesting. I don't like that they have been unprofitable, they've been losing money, but I like that their profit, I think their loss is getting less and less, and probably at some point then they will become profitable. And I like that their forward earnings, PE earning is becoming lower, which is good, because I like maybe around 30 or so, and I also like to compare with the peers. So this is a stock that I actually, follow quite closely. Um, so that is something that is actually very interesting. So I don't know if you guys have any questions. Let me know if you guys have any questions that you would like to know about what's going on in the market, what I'm thinking. What I'm always honest about with you guys is that I don't predict the market. I don't know if this war is going to continue or not, but for sure, what I do is I like to just position myself in a manner that allows me to at least make money out of it, whether the market goes up, whether it goes down. And how do I do that? I focus on high quality companies. And for the long term, I like to also just buy some ETFs. Like I was telling you, I just bought Berkshire Hathaway. It's more like a conglomerate, and other exchange traded funds and individual companies. Sometimes I write cash secured puts. I sell cash secured puts, and companies that I have been selling cash secured puts on include Amazon, Celestica. But with what is happening in the market, sometimes the market goes really like volatile very quickly. So sometimes I just open a position and then I exit, right? So that's why I shy away from telling people like buy this, don't buy this, because look, you may buy a stock and then it goes down and then you panic, you sell only for it to go up. So the best strategy is to not try and predict the market, but also manage risk, understand the things that you want to invest, make sure you invest in things that have solid fundamentals, at least from my experience, and just stay away from very speculative things and try to see what is happening in the geopolitical space, because sometimes what happens is that whether a stock has a very strong fundamentals, great management, but if things around the world become geopolitically tense, it's just going to be affected in the short term. But if you then have a long-term outlook of things, you are more likely going to make money, right? If you hold. And one thing, like I said in this on this platform, is that I have been avoiding doing naked options. I still have some options, naked options that I had from last year, but the lessons that I took out of it is that naked options are very risky. You are basically gambling, right? Because you can still be right, but not right enough to make money, right? So if you pay money like the premium, the issue is that you risk losing everything, all or some of the money. So with shares, I mean, as long as the company has fundamentals, I can just hold on to the shares, and probably the company will bounce back. So if you have been following me, thank you so much, guys. The 5 people who are watching, thank you so much for following. I'm going to be ending this in a short while. Thank you so much. Make sure you follow me, you subscribe. I'm going to be providing updates as to how I'm trading, how I'm investing, and what I'm learning. What I'm learning is that you have to manage risk. You have to be very careful with things that you are actually buying. And I like to have a long-term outlook of things. So stay safe, and I will see you guys in the next video. Thank you so much for tuning in, and bye bye for now. All right.